class action complaint has been filed against Robinhood.
Stole from the poor and gave
It's
back
really
to the rich.
heartbreaking, and I think it
We
should be
need
illegal
to
to
know
change the
more
rules
about
this
Robinhood app's
dramatically.
decision to
People
block
are
retail
accusing
investors
them
from
of
Robinhood of
purchasing
manipulating
stock.
the market. Why? Because it looked absolutely awful.
The online trading app, Robinhood, branded from the fable of a hero that helped distribute wealth by taking from the rich to give to the poor, standing up for the common man in the face of oppression, now emerges into a contemporary light, promising investing for everyone. But is it doing more harm than good? Are they living up to their mission to democratize finance, or merely are the users being used? And if Robinhood is truly trying to introduce new generations into the free market, then why are there restrictions that seemingly only exist to benefit the Wall Street giants? In this video, we're going to uncover the true tale of Robinhood as either the noble hero or ripoff villain. With the pandemic limiting typical expenditures on things like travel and sporting events, Americans found a new regard to manage finances and investments from the comfort of their own homes. The surge of amateur investors leaned on an accessible platform such as Robinhood, where they could trade with no fee and no minimum. According to an estimate from JMP Securities, more than 10 million new brokerages accounts were opened by individuals in 2020, a record-breaking number within a year. And within those 10 million new investors, 60% of those were from Robinhood. But the new sport of stock trading didn't end with the quarantine. In the first 2 months of this year, Robinhood had obtained an additional 6 million users. As of today, there are 31 million Robinhood users, according to the Financial Industry Regulatory Authority, or FINRA. Robinhood is growing rapidly, granting nearly anyone in the US easy access to day trading. This upsurging trading trend has reached numbers never seen before as a result of individual investors given the power of stock trading from a free mobile app. So, if Robinhood essentially largely equipped the country to contribute to its economy, then why is the app receiving so much backlash? Well, critics argue that Robinhood has betrayed its mission and that their interests are not truly aligned with everyday investors. Is Robinhood's business model fair? The real concern of ethics is how Robinhood is making money. Their business model is established to earn money in 3 ways: interest earning accounts, gold member subscriptions, and the largest source, selling the trades of their customers. It's a controversial practice known as payment for order flow, in which big investment firms like Citadel and Virtue pay brokerages like Robinhood for routing traffic to them. The firm then makes the trade on Robinhood's behalf. Criticism of this practice suggests that the company's interests are not entirely aligned with the customers, and that the free trades are not actually free. Unfortunately, Robinhood hid the specific source of revenue on its website, as well as trained their customer service representatives to avoid mentioning payment for order flow because they thought customers would find it too controversial. This poor decision led to charges of $65 million by the U.S. Securities and Exchange Commission in late 2020 for misleading investors about the true cost of trading with Robinhood, and for failing to seek the best available terms to execute those orders. The CEC says trade prices that were inferior to what other brokers offered, even counting the benefit of Robinhood's zero commission fee, cost Robinhood customers $34.1 million overall between October 2016 and June 2019. The issue is that the practice incentivizes Robinhood to send orders to the firm that pays the most, rather than finding the best outcome for their customers. This potential conflict of interest with its customers is why the platform Public decided to go PFOF free. Instead, to replace this revenue, Public introduced optional tipping, believing this method is more understandable and more empowering for its users. But the differences between Public and Robinhood continue, and that Public aims to reduce risk by offering fractional trading and excluding options, penny stocks, and margin trading. Some argue that prohibiting PFOF would force brokerages to charge commission and in turn discourage small investors from trading. However, Public disagrees and claims that the lack of financial literacy is a real reason for low market participation. Public's model shifted early this year, so we're yet to see if the broker can sustain this monetization model or will return to PFOF or start charging commission fees. As for Robinhood, in an appearance on CNBC's Mad Money, CEO Tanev said that the CEC settlement does not reflect the changed Robinhood we see today. That interview happened December of 2020, before the unpredictable rise of meme stocks. Is Robinhood competent enough? On January 20, 2021, there was an outstanding surge of GameStop shares. 8 days later, Robinhood abruptly limited purchases, but not sales, of high-soaring meme stocks. Disgruntled users took to social media accusing the platform of helping hedge funds who had shortened GameStop, AMC, BlackBerry, Bed Bath & Beyond, and Nokia. Several of these stocks were set to lose big if shares continued to rise, yet disrupted by amateur traders who colluded on a subreddit, Wall Street Bets. The company defended the freezing of trades, saying it was a risk management decision undertaken in the face of extraordinary circumstances, and also denied reports that it had sold some of its user shares without permission. Nevertheless, the blog had users infuriated enough to take legal action. Over 90 lawsuits have been filed against Robinhood, yet it's uncertain if they'll all make it to court to a user agreement clause that requires user disputes to be settled in arbitration and not in civil court. It was an ironic situation where Robinhood appeared to be helping the rich and hurting the poor. Limiting trades came across as a breach in its mission and contract with traders, as the Robinhood's block was the opposite of providing trading for all. On top of these allegations, Robinhood is facing the largest penalty ever ordered by FINRA, $70 billion in fines and damages. According to the authority, Robinhood lacked due diligence through the system-wide outages, misleading communication, and trading practices. Mentioned in this settlement was the suicide case of Alex Kearns, a customer that got carried away with trading on margin, even though he claimed to have turned that feature off. He was among more than 80,000 users who experienced this faulty technical error, and among 135,000 users whose account balances were reflected incorrectly. Although the idea of democratizing investing is polarizing, entrepreneur and NYU professor Scott Galloway believes that if done responsibly, it can become a solution to widening America's class of investors. Galloway's investment in Public shows his alignment to provide guardrails and education to protect new investors as they grow their financial literacy and curb high-risk behaviors. An example of Public's transparency is their use of safety labels on stocks deemed potentially risky by the SEC. Is Robinhood a good populist or an exploitive ripoff? Undoubtedly, Robinhood has had a positive and insightful market implication. Their hopeful mission is to democratize finance for all and aim to make investing friendly, approachable, and understandable for newcomers and experts alike. With this technology in the hands of the people, Robinhood became a disruptor in the brokerage industry by empowering first-time investors in ways that legacy providers like Charles Schwab and E-Trade Financial could not. They forced these investment giants to adjust their trading costs and innovate their technical tools in order to compete. Before Robinhood, anyone who wanted to invest in stocks would typically be charged between $5 to $10 a trade and required a minimum of $500 to open an account. Additionally, part of this mission to expand the population of investors stems from the fact that there's significant room for growth in the financial market. Looking at a survey from 2019 Pew's research, besides for retirement, over 60% of all Americans did not have investments. And according to a 2020 Gallup poll, 68% of young adults have no money invested in the stock market at all. Another piece of data that Robinhood founders leveraged was one showing the opportunity arising from new fintech companies and growing digital consumers. Harris poll shared that in 2020, 81% of Americans between 18 to 34 would prefer using technology for financial products over a traditional service provider. Compared to legacy brokerages, Robinhood gained a diverse group of customers, appealing to more Latinos, Blacks, and younger investors. Although some view this as a positive that these groups have been openly invited into stock trading, the opposing view believes that Robinhood is preying on minorities and low-income people. When Robinhood launched an incentive when the first round of stimulus checks were distributed, many questioned whether the company was targeting low-income people. Although a spokeswoman for Robinhood said that the bonus promotion was not connected to the government stimulus program, data from InvestNet Yodlee showed a correlation. The data showed that people with salaries between $35,000 and $75,000 increased stock trading by 90% the week after receiving stimulus checks, which in turn took a part in helping the market make a comeback. But consumer data also showed stimulus money was spent on bills, rent, and home improvement, therefore stimulus checks were still needed. As for the belief that amateur investors are buying and selling for quick wins, it has been proven untrue. CEO Vlad Tenev stated that actually most of Robinhood's consumers are buy and hold investors, and 2% are pattern day traders. Owning stocks or mutual funds before the lockdown for low-income Americans was extremely low, at 14% according to Pew's research, and at 35% for all of Americans. Robinhood increased the likelihood of these minority groups investing into stocks, trading options, and cryptocurrency. It could be argued that this forced competitors to lower trading costs and innovate to appeal to this prime massive audience that were able investors all along. Being in self-isolation for a year with a no-fee trading gamified app in hand created an increase of interest in the stock market as stocks hit a historic low. The entry and interest for retail investing expanded, allowing greater access than ever before through an open, accessible platform, creating a more personal experience. But the rise in these new investors does not suggest that Robinhood demystified stock trading for all users, as legal charges revealed that Robinhood misled customers in their true costs and lacked proper technical resources to support their customers. Even though Robinhood's model was questionable, the fascinating rate of first-time investors had major online brokers shifting to benefit too. Charles Schwab, TD Ameritrade, and E-Trade gained a surge of new accounts for offering zero commissions and fractional trading. Robinhood's drive to increase participation in the market through their mission to create a source of wealth for a new generation, in theory, is good because it created a new massive group of investors that otherwise had uncertainty and typical systematic barriers associated with stock investments. But with what we know, it's debatable whether Robinhood is on their path to fulfill their vision in becoming the most trusted, lowest cost, and most culturally relevant money app. With Robinhood's latest IPO, it's clear that the company's future is still expanding, with newer products in hopes that one day they'll be the go-to app for money management, just as we have our go-to apps for emails and navigation. Whether you see Robinhood as a fintech pioneer or sneaky outlaw, one thing is true. The company no doubt contributed to helping people actively engage more with their investments and added to the upswell of managing money dialogue. Bottom line, it's important to take note of the company's stocks that the SEC deems too risky and worth your time looking into a company's offerings before deciding to invest. No matter the platform, research suggests buying and holding, especially for novice investors, because buying to sell for quick buck typically turns into huge losses. Do you believe in Robinhood or do you prefer a different broker? Would you suggest any changes for new investors or have them learn by doing, even if the risks are high? Let us know in the comment section below. Hit the thumbs up if you enjoyed this video. Thank you for watching, and we'll see you in the next one.